Hi, and welcome to this morning's early global view on Thursday, November 19th, 2015. It is currently 7:45 a.m. Coming to you a bit later than usual because we wanted to see both the U.S. weekly claims, which came in a little higher than expected, but had that only weighed on the S&P a little bit, as we'll see, and also the Fed's Loretta Mester was speaking on CNBC and being the first one to express herself after the FOMC minutes release. We wanted to hear that, but she's basically saying what we were looking at, which is the Fed remains somewhat circumspect in here. They're leaning toward a hike in December, but that could change. Now, also, in general, we thought the minutes were more balanced, that is to say, leaning toward dovish, than the statement after the meeting in late October would have led people to consider. And specifically, seeing what this did to the markets, we have to remind you, before we even look at the intermediate term charts, that 2058 to 60, especially 2058 being a significant daily channel down break last week on the December S&P 500, meant that getting back up to it and failing on Tuesday left the market looking like it might be rolling back to the downside. However, even before the FOMC release into Wednesday, then the market pushed back up. And here is your FOMC release hour. Here's the actual half hour when it occurred at 1 o'clock. And you can see how after stalling back into no better than 2060 to 63 with a brief push up to 65 mid-morning here, once those minutes were out and people saw that you were not as hawkish as people expected, that set the market off on the upside. We also noted early yesterday that even though we had this dip late Tuesday, that the hourly MACD had remained right around the top side of its upper runaway band, right in the vicinity of its upper runaway band, and therefore the higher activity immediately on the opening on Wednesday morning basically kept this out over the runaway band. So the burden of proof was on the bears to put this market down or watch it strengthen further. And what we got was not just a push up above 2058 to 63, but a push up above 2075 again, the failed up break going back to early last week. And 2075.80 is a fairly key resistance. So the fact that the market is now up 3 on the day, up at 2083, speaks well of its ability to carry on. And the higher resistances are variously 2100, 2120, and the 2132 lead contract all-time high. And that pretty much does it for the short-term view of the S&P 500.